Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarley. Great to have your company this Thursday afternoon as we react to the Fed's rate cut that was widely anticipated, but of course they really did flag that they're not likely to do it again in a hurry. Let's have a quick look at where the local market has finished the day's trade and a bit of a petering out towards the end of the day. We have been watching some good momentum coming through in gold players, gold getting a bid and silver hitting a record high. Also some good moves from the likes of Myer and Flight Centre. We'll get into why in a moment, but a lot of that optimism did peter off somewhat in the latter part of the day's trade. There's also, of course, going to be reaction on Wall Street to what we heard from Oracle after the bell as well. And when it comes to some of the sectors that we are seeing here locally, our tech sector off by about 1.4%. So in terms of the overall thematics of the day, a little bit of mining optimism because we did see some good moves coming through from those miners, particularly gold players as well. 4.3% is where we sit with unemployment. We had a big drop in full-time employment in the month of November, and the RBA, of course, will be weighing that mixed result for the labour market, but the jobless rate still remaining at 4.3% despite a total job loss of more than 20,000. And first place for silver, gold rising for a third day after that Fed cut, but as I mentioned, silver climbing to a record high. Let's have a quick look at some of the stocks that we are watching today, particularly when it comes to consumer discretionary, and they really don't want to play ball. That board, we fixed it, still not working. Let's instead have a look at the tech players. WiseTech there down by 3%, Xero down 1%, and Zip down by about 2%. As I mentioned, we really will be watching what is happening in the overall tech sector in response to what we saw in after hours trade on Wall Street. And a quick look as well at the travel stocks, particularly Flight Centre up 5%. It's acquired British online cruise agency Igloo, which prompted it to upgrade its profit outlook. It was also the stock of the day, and we'll get to that a little later on. Some of the other stories we're watching: IAG under pressure, the ACCC opposing its acquisition of RAC WA's insurance arm. IAG does say that it will dispute that. AMP, meanwhile, moving higher, set to pay $29 million to settle a class action related to insurance advice. Investors seem pleased that that's out of the way. Transurban a little weaker. It says it's willing to compromise with the New South Wales government over the state's toll roads reform. I tell you what, I'm not willing to compromise over the fact that we are hearing we'll have to pay both ways on the Sydney Harbour Bridge and Tunnel in a couple of years. And Myer up by about 11% or more than 10%. Total sales rose, but I think the move here was more on the fact that Solomon Lew is going to join the board from early next year. And Coles there also news it's expanding its partnership with Uber Eats. Let's welcome to the COB Adam Dawes from Shaw and Partners. Great to see you. It's just sort of like a holding pattern at the moment, isn't it, into Christmas? But at least we got that lift from the Fed cut. How did you see today's trade?
Yeah, I just think our Aussie market's got no guts. You know, it's sort of it, like you say. Most days we sort of have this really good rise, and everything sort of starts to, you know, everyone gets excited. There's lots of buying going in, and then sort of by 11 o'clock, 11:30, it all starts to peter out. And by the end of the day, we're either up a couple of points or we're down. So, just feel like this market needs to get some kahunas and really start. You know, we could. Get in there and do some buying, but I also feel like we're in a bit of a holding pattern, as you say. It is really, we are just sort of probably going to limp right through to Christmas, since we've only got, I don't know, probably another sort of 5 or so, 8 trading days left before the Christmas break. So it is going to be a little bit difficult to sort of see that Santa rally. I think it better hurry up, but yeah, we need some conviction in our market. And we have started to see that rotation into the mining sector, which potentially could give us a little bit of an uplift. But it's a bit tough at the moment to see any real sort of clear vision on how our market's going to end in 2025.
I reckon apart from maybe you and me, maybe everyone's going to lunch around 11 downing tools, and that's why there's not much happening. Okay, let's talk about some of those miners then, and particularly gold players looking good today.
Yeah, they certainly did. Ramelius and most of the gold story had a really good run. And there you go. So yes, Ramelius probably the head of the pack there. It's sort of up 6%. It's good to see that our miners and especially our gold miners continuing to move forward, and obviously silver sitting there and hitting that new high as well. So look, I don't know how too much fundamentals is really sort of going into these ones now. It's just really predicated on that gold price, and that gold price is continuing to move higher. So if any gold company out there is not making money in this environment, you should be getting out and you should be selling very, very quickly, because basically now you're seeing all of these gold miners that are that were margin or online with all-in sustaining costs should be making money now, and that's going to be a real litmus test if when this gold price does start to come back a little bit, it'll be the quality that'll rise to the top, and a lot of those mid-tier guys are going to sort of fall away. So be a little bit careful with your gold plays at the moment. Stick to the quality, I think, is the best advice there.
What about James Hardie? You flagged Citi had a good note out, something about what we can tell from director trade here.
Yeah, so it was an interesting note and helped James Hardie get up today. I think it was up 7% when I left before the close, but it's given a bit of a tailwind. One, we've got directors buying, and that's obviously a clear, good sign that markets and the directors can see a lot further than what we can. But really then from there, if we are going to see further interest rate cuts in the US next year, and certainly Jay Powell comes off, I think it's March, Juliet. I think it's March. He's his last day as the Fed governor. But obviously someone is going to be put in there that's going to be very much focused on what Trump wants. And Trump basically wants those interest rates down, which they will potentially then start to cut aggressively going forward, which is where James Hardie comes into the picture, because then obviously there's a very good tailwind of housing, and potentially that new acquisition in the US might start to come into the fore as well. So it was a good note from Citi showing directors buying, the tailwind from interest rates cuts in the US, which should then continue to make James Hardie look attractive, because it has been beaten down. Potentially there is some value, and we did some buying on that one this morning. So comfortable to see that one, and hopefully, fingers crossed, we can get some positive sentiment back into that stock.
Let's talk about the retailers as well, because Myer obviously had a good day. I mentioned Solly Lou joining the board, but also had record Black Friday sales. I mean, everybody's out there spending. The governor alluded to that earlier in the week as well. So, and I think the CBA household spending insights also pointed to most of us going to Oasis and Metallica as lifting spending too.
Yeah, look, I think it's more to do, Solly Lou's coming onto the board. I mean, he's been wanting to get on the Sullivan, onto the Myer board for a while now. So this has sort of paved the way, and I think investors are cheering that he will do and move this and make it a turnaround story. Certainly, Black Friday sales were good, but how could they not be good? They went for 3 weeks, yeah? There was Black Friday sales every day, and then there was Cyber Monday, and now we've got Christmas coming up as well. So certainly there's been a lot of discounting of stock to get that moving, and obviously as people come in towards Christmas, sort of shopping a little bit earlier to take advantage of those sales going forward. But certainly, I think the retail, and even JB Hi-Fi under $100, I think it was 90, 94 or something like that, it's starting to look a little bit better. And sort of those frothy valuations that we have seen in the retail side of things is starting to come through. And we've known this from the banks. The banks have told us for a while now that household savings are increasing at a rapid rate. Now, even though cost of living is tough, yes, there still is a really good buffer from the bank's point of view as far as the mortgages and the savings rates. And that savings rate is continuing to move higher as well. So it does look like Christmas and the sales around Christmas should be doing well.
Indeed. Well, I'm doing my part. Another parcel arrived for me today, so keeping everyone employed, the mailman as well. And so in terms of this overall Santa rally, whether or not it's going to appear or not, what's your kind of base case, as you said, about 8 or 10 days left?
Yeah, the base case is that we've really got to get the resources moving, because I think we've already seen the movement in the banks. They've done all the heavy lifting this year. That has been the story. of 2025 and how the banks have really moved. I think the resources need to now start to do some of that heavy lifting. And so that is going to be a little bit tougher. I mean, the resource space, obviously gold is a standout. We're starting to see the lithium sector starting to get some life back into it as well. Iron ore is holding around that $100 mark, 104. So look, there's nothing too crazy about what's going on there. But I just think that if the resources can start to move, we've got some really good value in the tech stocks. I mean, the US tech stocks have fallen, but they've bounced and they've started to move higher. But our poor old tech sector is still getting sold off across the board. So it'd be great to see some of those tech stocks starting to move. Base case would be that we are evens here, and we just sort of trundle along where we are, not going up, not going down, but just holding this line. I think that'd be a really good outcome for our market for this year. It's been a tumultuous year, volatile year. But certainly, portfolios are looking a lot healthier than they were a couple of years ago. So base case is I think that we just move sideways from here. As you say, lower volume. There's lots of Christmas parties going on. There's lots of stuff happening. So the traders aren't really sort of willing to go all in due to the fact those light volumes can wash stocks around a fair bit. But base case, let's fingers crossed that we stay where we are and we finish the year on a good note.
Indeed. Moving sideways, perhaps like I will be after Christmas lunch. Thanks, Adam. Always good to chat. Adam Dawes from Shaw & Partners. All right, we talked about Flight Centre, and it was the stock of the day, rising on a UK cruise line acquisition and a full year 26 profit upgrade. And Andrew spoke to our experts, Mathan Somasundaram from Deep Data Analytics and Howard Coleman from Team Invest.
Extremely well-run business. They've always tried to operate the business on negligible debt, ran up some debt during COVID, which they've been gradually paying back. And it doesn't pass our filters because of recovering from COVID, so our members wouldn't be looking at it at all. But certainly among the businesses that you'd expect in another couple of years' time will be passing our filters, and our members would probably quite like. I actually still have a small holding in Flight Centre. I sold most of it during COVID.
I think that the interesting part here is just the consumer cycle. We've had in the local market a lot of the market darling retailers, classic cyclicals, underperform, and that tells you the consumers are under pressure. Travel overall, I think it's been, you had a bit of a revenge travel come through after the pandemic. That's starting to run out, and things have come through, and also a lot of the players like the airlines have squeezed the margins for agencies. So despite that, it's been tough.
All right, well, we've been stabilising, moving sideways, whatever way you want to put it. Let's have a look at some of the leaders, though, today. And, of course, Dawesy talked about James Hardie and the momentum in director buying there, up 7%. Ramelius continuing to get a bid on that higher gold price and share buyback announced yesterday. We touched on Flight Centre and the reason why it's higher. Also some moving there coming through from Centre Group, and that was quite interesting in terms of a statement that came through on the ASX today saying that it has noted this media report in The Australian in relation to a potential transaction concerning an interest in Westfield Sydney, and it said that as part of its ongoing capital management strategy, it's actively engaging in discussions with third parties. Nickel Industries also higher. To the downside today, Catalyst Metals didn't have a good day. DroneShield giving back after a big rise yesterday. Mesoblast, Eagers Automotive and Liontown Resources as well under pressure. In the small end of town, we had a lot of resources companies moving higher. Intelligent Monitoring Group, that was an interesting one too, and we did just speak to the CEO about that acquisition. You can find that interview on our website shortly. To the downside though, we had weakness from Atlantic Lithium and interestingly Challenger Gold going against the movement in a lot of the other gold stocks. All right, tonight we have got the US trade balance coming through for the month of September. Bank of England Governor Bailey also speaking, and UK GDP expected to edge up just slightly by 0.1%. Not much on the docket for tomorrow, but NAB will be holding its AGM as we round out the week. Let's have a look at how the local market has finished the day's trade, and look pretty flat there on the CBO 200 after a positive start. The ASX 200 has closed a little bit better than that, up by 13 points, a tenth of 1%, 8,592, and crossing back above its 20-day moving average. We'll be back from 9:45 a.m. Eastern again tomorrow. We'll see you then.